Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, it's the Christmas season, the holiday season, if you will. We have the IWM, which is the small caps. That keeps dropping below its 20-day now. The Dow has quietly dropped 1,000 points, also below the 20-day. Now, the ones that are holding up pretty well is the NASDAQ and the S&P, right? So far, they're holding up better than the broader market. The broader market is starting to already trend lower. Now, we'll see how this plays out. Now, it's my take, maybe not right away, but within the first quarter, we're going to get a correction about 20%. Now, a lot of people say, but Mike, 20%'s nothing. We'll bounce right back up, and that's a possibility. But I do predict we're going to come down about 20%, and we may continue lower from there. We'll see how it plays out at that time. But a correction is long overdue. We've been straight up for, well, most of the year, right? Straight up, and we've been in this bull market really 16 years. Most of you watching, you younger people, you've never seen a bear market, and you would believe that a bear market could never come again, but I would argue that it will, and I guarantee that it will. It's just a question of when. Now, I got together with a little Christmas gathering, that's called a holiday season gathering, with some old friends from work and school, and we had a little meeting, and someone went and asked me the question what I thought about the economy. I had to tell him the truth, you know. I said, I think a Great Depression's coming. Do not mention this to your friends and family. And the look that came over his face, what are you talking about? You know, he's like, everybody just watches the mainstream media. They don't watch Tall Mike. If you watch the mainstream media, you think this is going to continue on and on forever. And it may. You may be right. Doesn't mean I'm right. But yes, I mentioned that I thought a Great Depression was coming. Then everybody, they were kind of interested in what I was saying, but they were kind of angry. They were arguing the other side of it, right? That's impossible, that we have modern monetary theory, that we're just going to print our way out of this. Well, look, if you study bubbles, and we are in a bubble, in a real estate bubble, a stock market bubble, you would have to go back to, well, the roaring 20s, right? Right before the Great Depression of 1929. I mean, we were going straight up. Stock market was doing great. Everybody was having a party. And I would say that's where we're at now as far as what phase of the economy we're in. We're in this bubblicious phase that just keeps getting bigger and bigger and bigger. Now, if you look at bubbles, what always follows bubbles, you know what it is? Depressions. Great depressions follow bubbles. They follow the bubble is a depression, deflation of assets. That's what follows the bubbles. Right now, if you look at modern day bubbles, let's take a look at it. All right, so modern day bubbles, what do we have? We had the dot-com boom, right? I mean, that was a run-up, basically about a 5-year run-up in the stock market, right? Before the bubble popped, right? What happened to the NASDAQ? Lost about 80%. 80% went down, right? Okay, so right before the bubble, it looked great. And if you said it was a bubble, everybody would look at you like you were crazy, but it did pop and it went down 80%. What happened to the real estate bubble, modern day I'm talking now? Okay, so from 2000 to 6, it was about a 6-year run-up, right? And a 6-year run-up, because everybody knows it's impossible for real estate to go down. Just ask your neighbor, is it possible your house could go down? Impossible. Everybody wants to live here. Everybody wants to buy here. Nobody's going to sell. We're locked in at 2.8%. And that's great, right? But we're in a bubble. I got news for you. We're in a real estate bubble right now, greater than the 2008 crash. But okay, so we had this 6-year run up in real estate. Now, what happened when the bubble popped? Went down 34%. Now, 34% is not a lot, right? But here's the thing. You see, they stopped that bubble and they started printing money to reinflate the bubble as fast as they could, printed $30 trillion to get the bubble we have today, right? The bubble today is much bigger than the bubble back then. And I mean, you can tell just by looking at the Case-Shiller index, right? We're 40% above the mean being, well, the long-term moving average, for lack of a better word. To revert back to the mean, which the market always reverts back to the mean, reverts back to the long-term moving average, we'd have to come down by 40%. That's what I've been calling for. But I think we'll probably overshoot that to the downside. But we've had this, run up, and we're got this bubble bigger than the 2008 bubble. And yes, we're going to come down more than 34%. But that's what the bubble did in 2008. Same with the stock bubble, went down 80% in the dot-com boom. And we're in a stock bubble now. I mean, you can just look at things. Well, look at the Buffett indicator, for example. It's at a record right now, 210%. What's normal? 100%. So 210% got to come down, well, at least 50%, right, to get down to normal, and probably going to overshoot that to the downside. We'll see how this plays out. But these are bubbles. Now, the stock bubble had a 5-year run up. The real estate bubble had a 6-year run up. Where are we at right now? We've had a 16-year bubble. 16 years, both stock market and real estate market, right? 16 years. The biggest bubble in the history of the world. Now, why did the bubble run up for 16 years? Because they won't let a recession happen. They won't let it pop. They won't let it dissolve the bubble, right? So the bubble, when it does go, it's going to be the pop that's heard around the world. It's called the debt bubble. The debt's going to break, going to blow up. These things will come crashing down. Now, that doesn't scare me that the assets will be deflating. You see, what scares me is the government response to that. Just like the pandemic wasn't the problem, right? I mean, we know that now, but the pandemic was not the problem. It was the government's response to the pandemic that was the problem, that created the problems that we're living with still today. The inflation we're living with today was caused by the government's reaction to the pandemic. And so when the bubble finally pops, the debt bubble pops, and all the assets start to deflate, which would be normal, right? That would be normal. You got to let the air out of the bubble. But the reaction that the government's going to have is what scares me, because they're going to continue to print the money, right? And 30 trillion. Oh no, that's going to be week one, right? Week two, we're going to get another 50 trillion. So you'll have $80 trillion printed in 2 weeks, right? What does that take us to? Well, about 120 on the debt, right? But that's not the 200 trillion we already have in the unfunded liabilities. See, there's going to be a big problem because the government, they're still in that Keynesian economics mode where they think they control everything. They think they can fix everything. Well, you see, they've lost control, and that's why we're going to revert back to Austrian economics, which is free market, sound money. That's what we're going to revert back to because they have lost control, right? They'll keep cutting the rates. They're going to cut the rates again next week. But you look at the TLT. Look at the TLT. That's the 20-year bond, right? 20-year bond is shooting up. I mean, the TLT is going down, right? Bonds go down, but the interest rates are going higher and higher. Now, why are the interest rates going higher and higher when they're cutting the interest rates? They cut the interest rates. Inflation is going to come roaring back. Now, they have to cut the interest rates, otherwise all the banks are going to go out of business. Now, you're going to notice coming up real soon, they just approved a lot of mergers. You're probably even going to see some of the big banks merge together. You see, they want to get fewer and fewer banks before they all start to go under, because then it's easier for them to manage when they have fewer banks. In the Great Depression, we lost 9,000 banks, right? Today, we only have about 4,000, so we're not going to lose 9,000. That's the good news. Now, they're going to try to consolidate these banks. Now, what they want to do is consolidate them down to the 6 big ones, right? And then from the 6 big ones, they want to consolidate it down to the one bank, which is the central bank, and that's when they're going to issue the central bank digital currency. Reject it at all costs. That is the complete loss of your freedom. Now, a lot of people say that's no problem, right? You're not doing anything that you don't care that the government knows about, right? Okay, so you don't care, right? Well, I care. I still want my freedom. This is still a free country. We have a little bit left, not a lot. We've lost a lot in the pandemic, lost a lot in 9/11, right? They took away some of our freedom, some of our rights, and they do it in the name of safety, but it's really taking away our freedom little by little by little, and then it's going to be all at once, right? That's how this whole thing will start to blow up, right? So anyways, with my friends I was talking about, I think a Great Depression's coming, right? I think we're in a recession. I think they will revise all the reports, they will revise them to learn that we got into this recession this year, and next year we'll probably head into a depression. But my Mike, we got the Donald in there. The Donald's going to fix everything. There's a lot of hope right now, and I love the hope, right? I think our country needs a little bit of hope, but I don't think the Donald can solve the problem. You see, you're going to wake up one day and those digits on the screen are going to be gone, or they're going to be more of them, but the more of them, they're not going to be able to buy anything because the dollar will actually go to zero. It will become completely worthless. Right now, when the dollar does fail, and it will fail, it's already failing. According to the government statistics, I guess it's lost 98% of its purchasing power. I say it's lost 100%. There's a little bit of confidence left in. So, okay, so that last 2% is going to fail. It's going to go away completely, right? Well, you need a little bit of real money, a little bit of sound money just to protect yourself so you can get through the crisis until the reset comes. Now, you shouldn't fear the reset if you have a little bit of real money set aside, right, to get you through. The reset's coming, and after the reset, we will be able to be more prosperous again. We will be able to rebuild, hopefully without a Federal Reserve. I know a lot of the Keynesian economists out there, they want the Fed. They think that's their hero. That's what they live by, and I don't want the Fed. I want a free market. I want to go back to capitalism. Someone says in the comments, just the last video, right? They go, well, this is capitalism for you. Look, we don't have capitalism. We have nothing like capitalism. Capitalism is not printing $37 trillion of money. That is not free market capitalism. I'm sorry, it's just not. Anyways, we're going to get back to free market capitalism when this debt bubble implodes upon itself. But once again, that's just my take, but you shouldn't fear what's going on when the reset happens. You should have a little bit of sound money set aside so you can get through until the reset happens. And I think they will reset the currency. It'll be several resets, right? The first one won't take because that's going to be the central bank digital currency. I do think that's going to fail. You got a fiat system, and then you're going to have a tokenized fiat system. It's still fiat. It's not backed by anything. When you get backed by something, get backed by gold, get backed by silver, then you start to be all right again. You'll start to prosper. You'll start to grow. The government won't have the control over you that they've had, right? They've controlled us all of these years by the printing of money, right? They keep their rich friends rich, and they keep the poor people poor. There used to be this middle ground, right? But that's kind of disappearing now, kind of going by the wayside. And you know, they're not going to the rich side. They're kind of slipping down the slope, right? Down to the poverty side. Some of them have already lost their homes. Home delinquencies record high. Credit card delinquencies record high. Everything's a record high, right? I don't even think people are paying on their student loans anymore because they don't have money, right? Nobody's got the money to pay that all up. But anyways, you want to have a little bit of gold and silver in your possession. You don't need to go crazy. Tall Mike goes crazy, but you don't need to go crazy. Just a little bit will get you through till we get the sound money out there again. The sound money hopefully will be backed by, gold and silver, but we'll see how that all plays out. But right now what we have this is a little bit more complicated, but we have a money supply right now. It's called the M2 money supply, and it's the first time it's actually going down since the Great Depression. That's how you can kind of tell that the Great Depression is actually on its way. The Great Depression is going to show up. The M2 money supply is actually dropping. What that means is that the banking system, they're not making loans anymore because they see what's coming, and they don't want to have their neck out there on the line for the loans that they know you're not going to be able to repay. So loans are getting harder and harder to get. The banks aren't making any loans. They're not doing any deals. And they're trying to get out of the loans they're in because that loans they're in, they're underwater. Commercial real estate, underwater. A lot of the home loans are already underwater. I don't even know how it's possible because we're still at a record high, but a lot of them have already fallen underwater. So the M2 money supply is coming down. This is exactly what happened in the Great Depression. And that money supply, M2, has not come down since the Great Depression, since the roaring 20s. And it's starting to come down, and we'll see if we fall into a Great Depression like we did then. History maybe doesn't repeat itself, but it sure looks like it's going to rhyme to me. But what we also have is you can look at the velocity of money. Now, what's the velocity of money? It just means how many times that dollar bill changes hands. You get the dollar bill in your paycheck, you go buy a snow cone, they go make money, they put it in the bank, it's all circulating then, right? It's the velocity. How quickly that all happens, right? Well, it's starting to fall off a cliff. It's falling off a cliff, the velocity. Why? Because all the rich people, they got all the money. It's just sitting there, right? Just sitting there in their bank accounts. Now, the poor people, they're spinning their wheels, but they don't have any money to spin anymore, so they're doing it with credit cards. And when the credit cards run out, then they go the buy now, pay never plan. And when that runs out, then where do we go? Well, we go homeless people, right? Homeless camps are everywhere. They're in my neighborhood now. They're everywhere. I can walk down the street and talk to the homeless people if I want. It's really getting kind of sad. This is the richest country in the world. No, we're not the richest country. We're the country with the most debt. And this is what the debt is bringing us. It's bringing us an extreme divided country between the rich and the poor. We'll see how it plays out. Maybe the Donald can do something. Maybe he can inject some positivity to the country. We need that positivity, but I don't have that positivity right now. Yes, do not talk to your friends and family about this. I think we're going into a Great Depression. They can't handle the word depression. It's not that bad. Just prepare a little bit for it. Anyways, I'm Tall Mike. You like the stuff? Give me the thumbs up. Punch the subscribe button. Get out there, everybody. Have a great day. Bye-bye now.